The world of electric vehicles is undergoing a massive transformation, with legacy automakers like Ford looking to challenge Tesla's market dominance. Ford has committed to investing over $50 billion in the next 5 years, aiming to produce 2 electric vehicle models by 2026. The big question now is whether this is the opening Tesla has been waiting for to leave legacy automakers behind. Is it too little too late for traditional automakers, or does Ford have a shot at catching up with Tesla? Today, we're going to explore the pros and cons of Ford's attempt to challenge Elon Musk and Tesla's vertically integrated system, as well as the shocking truths Ford's CEO has revealed about Tesla that might make even the most loyal supporters of legacy automakers start questioning the future of these companies. Before we dive into this intriguing topic, make sure to hit that subscribe button and smash that like button to stay updated with all things Tesla, Ford, and the EV industry. Ford's CEO, Jim Farley, is setting ambitious goals to make Ford the top electric vehicle maker in the world. But despite these bold claims, there's one problem. Ford is currently losing money on every EV it makes. Farley has admitted that the company needs to rethink its strategy if it is to successfully compete with Tesla. Interestingly, Ford's founder, Henry Ford, pioneered a concept known as vertical integration, an approach where a company controls its entire supply chain and manufactures all its components in-house. This strategy allowed Henry Ford to lower costs and improve product quality, eventually making the Model T affordable to millions of Americans by 1930. Tesla has followed a similar model, which has helped the company become the dominant leader in the EV space. The rise of software-based electric vehicles has forced major automakers to rethink their traditional business models. Tesla's vertically integrated system, which allows it to reduce reliance on suppliers and make significant profits from vehicle sales, is part of why it has outpaced the competition. Ford and other automakers are now scrambling to catch up and adopt similar strategies. Historically, automakers would purchase parts off the shelf from suppliers, a practice Tesla's CEO Elon Musk has famously called catalog engineering. By designing and building more of their cars in-house, Tesla has been able to stay ahead of its competitors. As the automotive industry shifts toward more in-house manufacturing like Tesla's vertically integrated system, Ford has committed to investing heavily to try and follow suit. The challenge, however, is that Ford is still losing money on every EV it produces, and the company must rethink its strategy to compete with Tesla. As part of its $50 billion investment over the next 5 years, Ford is planning to produce 2 million electric vehicles by the end of 2026. However, producing EVs requires about 40% less labor compared to traditional internal combustion engine vehicles. This is a major issue, as fewer workers will be needed to build EVs, though some of them could find opportunities in technology, batteries, and other sectors. At a recent conference, Farley emphasized the importance of moving away from the catalog engineering model and transitioning to more in-house manufacturing, similar to Henry Ford's Rouge manufacturing complex in Dearborn, Michigan. This complex, built in the early 1900s, was a prime example of vertical integration, which helped Ford dominate the automotive industry. Other major automakers like Volkswagen, General Motors, and Mercedes-Benz have started to adopt similar business models, but they still rely on suppliers for critical components, such as electric motors, and are struggling with software development. Lucid Motors CEO Peter Rawlinson, who is a former vice president of vehicle engineering at Tesla, pointed out that both Lucid and Tesla benefit from a more vertically integrated approach, which allows them to better compete in modern automotive technology. He highlighted that major players in the industry still haven't recognized that electric vehicles require more than just off-the-shelf motors and transmissions. Instead, the market is now in a technology race, and automakers need to invest in electric powertrains and battery technologies to stay competitive. One of the key takeaways from this shift in the industry is that automakers are moving away from relying on suppliers for things like steering controls, semiconductors, and electric components, and are instead investing in their own manufacturing capabilities. Tesla has already demonstrated the advantages of this approach, purchasing raw materials directly, manufacturing its batteries, and developing its software in-house. This has allowed Tesla to become a market leader in the EV space, even as it faced challenges with vehicle pricing. While Tesla's strategy has been expensive, it hasn't deterred investors who continue to believe that Tesla's vertically integrated cars will remain popular in the long run. Other automakers, however, are cautious about bringing all aspects of EV manufacturing in-house, especially when EV sales still account for a small portion of overall vehicle demand. According to IHS Markit, only Tesla, Lucid, and Chinese automaker BYD manufacture all their electric motors internally. Meanwhile, Ford, Porsche, and Mercedes-Benz are still sourcing electric motors from suppliers for their current EV models. Ford, however, is eager to follow Tesla's lead. The company has acknowledged the need for new plants and supply chains to ramp up its production of electric vehicles. The goal is to produce 2 million electric vehicles by the end of 2026, including an electric F-150 pickup truck. This effort is expected to cost around $50 billion. While Ford has outsourced much of its internal combustion engine work in the past, the company is now looking to return to its roots and bring more aspects of EV manufacturing in-house. The strategy will be complex and require significant investment, but Ford is determined to catch up with Tesla. However, the reality is that if Ford wants to compete with Tesla and other leading EV manufacturers, it will need to make substantial progress. Producing 2 million vehicles in 2026 will be a major achievement, but Ford will need to aim even higher to stay competitive. By 2030, auto manufacturers that haven't switched to electric vehicles could be at risk of going bankrupt, and Ford doesn't want to be left behind. In addition to the intense competition from Tesla, other automakers are also struggling to meet the demand for electric vehicles. For example, Mercedes-Benz, Ford, and Porsche are still sourcing electric motors from suppliers, which puts them at a disadvantage compared to Tesla, Lucid, and BYD, which manufacture their own electric motors. Ford is determined to bring its electric motors in-house, but this is a complex and time-consuming process. What do you think about Ford's plans to catch up to Tesla? Do you think they can pull it off, or is it too little, too late? Let us know your thoughts in the comments below. We would greatly appreciate it if you left a like and subscribe so you're always in the loop for the latest EV and tech news. Thanks for watching, and we'll see you in the next video.